Welcome to Crunch Times, their place to be to make the tangible connection between your business operation and its financial performance. Today, I want to talk to you about a very important topic, and that's how to check the financial health of your business. So, I want to talk to you about why it is important and what are the exact steps that you need to take to check the financial health of your business. So, let's go. Just like your physical health, believe it or not, your business financial health needs also a regular checkup. So we are going to find out how healthy your business is. So in this video, we have some specific objectives. We are going to talk about what a healthy business is to start with and why do we really need to do financial health check. And then I'm going to walk you through different steps and matrix and areas of your business that you really need to look at to be able to perform the financial health check. And at the end, we are going to talk about, okay, so you have gone through all these. How can you really act on your findings? A healthy business is like a thriving garden. Just as you monitor your plant's growth, it's also essential to track your financial health. So it tells you if your business is profitable or not. If you have a stable cash flow or you have some areas that the cash is leaking. It will show you the area that needs improvement and also show you opportunities for growth. Also highlight some of the risky areas that need your immediate attention. So how to perform a financial health check, you might ask, now that you know how important it is. So first, we are going to start with assessing your profit margin. Not profit, but profit margin, which is the result of subtracting your sales or your revenue from your direct cost or your cost of goods sold. Why gross margin is so important is because it takes care of all your other fixed costs, such as if you pay yourself a salary, if you pay marketing or so many subscriptions that you have, if you pay rent. And that's why it is important, because we need to understand how big it is in terms of dollars and percentages to see if you actually have a sustainable business that takes care of its own cost. So we are going to start with your profit margin. And then we are going to talk about your debt. How much debt do you actually have? So the amount of debt that you carry in your business is sitting on your balance sheet. If you are a business owner and you don't know how to read your financial statements, that's completely okay. You are not alone. I have a great video for you that shows how to read your financial statements in 5 minutes or under 5 minutes. So I'm going to put a link here for you. So for those of you that know how to read your financial statements and don't need to go check out that video, or feel free to check out that video afterwards, we are going to look at your debt and how it's increasing or decreasing compared to last month or last year. So if your debt is constantly increasing, it means that you have other problems in other areas of your business. So you are not generating enough cash to pay for your expenses, and hence you are constantly borrowing money. So definitely look at your debt level. And then, you know how I love budgets, financial projections, and all those. So you really need to start evaluating your budgets versus actuals. And if you don't have a budget, please consider starting with some budgeting or planning, whatever you want to call it. Budget is a little bit of an overwhelming word for so many. So why do we need it? Because then it shows what our plans were and where we are compared to that plan. And if you are not really in line with the plans that you said before, what is the best strategy to deploy? So for example, you sat down and planned something for your business financially and operationally in November or December of last year. And now it's end of April or May, and when you're looking at your numbers and your performance, things are not really going to plan. So there are two scenarios. You're either doing so much better or a little not so good. If you are falling behind, like on your sales or your profit or the plans that you set forward, so you really need to start thinking, can I control my sales or revenue? Can I go out there and bring more money in? Or can I run a leaner business until my sales and my income catch up? And if you're on the other side of the equation and you are doing so much better, maybe it's time to think maybe you really underestimated the strength of your business back in November and December when you were planning. Do you really need to go back and then revise the rest of the year and then grow the business a little more aggressively? So these are the strategies that you need to think about. Going to your balance sheet again, we are going to look at the level of accounts receivable and payable that you carry. So for a lot of businesses, like retail businesses or some service providers, as soon as they invoice or as they ring that register, they actually get paid. But for so many of us, when we invoice, we don't get paid right away. So that's why we carry accounts receivable on our books. And we really need to pay attention to and make sure it's not growing beyond control. It means that then people are not just paying us on time and forcing us to really stretch our cash, and maybe in some cases we really seek extra funding, loans, and etc. to be able to really fill that gap until we get paid. And on the payable side, we need to look at how much payables we have and how fast it's growing and shrinking, because it means that there might not be a balance between our cash, accounts receivable, and payable. If we pay people faster than we actually get paid, there's gonna always be a gap that we really need to push for closing. Now that you know the specific area of your business that you need to look at and measure for your financial health check, what are the actions that you really need to take? I have already talked about some of the specific actions throughout, but you need to really address your weaknesses first. So, for example, if you understand that your expenses are growing exponentially, and that's one of the weaknesses that you identify throughout this health check, you really need to take control of that to begin with. And then move on to optimizing your strength. So if, for example, you know that you have a very strong sales team in terms of their approach and their knowledge and insight, and sit down together and understand why can they push for more sales, what is stopping them, because that's the strength that you really need to optimize to bring your business to where it was and where it wants to go. And throughout this process, you get to set new goals, which is great because goals provide direction and motivation for us as business owners and for our entire team. And don't be overwhelmed if you really need to set new goals. For example, if you understand some of your weaknesses, we're actually being so optimistic and putting the numbers that were not attainable in your budget. So then start to put some numbers that are smart and reasonable and achievable and go with those new goals. And throughout this process, keep monitoring your progress, because that's how we get better, by monitoring our progress and understanding where we are today compared to where we said we are going to be. And if we are not where we said we are going to be, what are the strategies that we need to consider and what are the next steps that we need to take? And as always, don't forget to connect with me. I'm here to support your business and your venture, and together we can make stronger businesses. Good luck to you and your team.